Good morning, folks. My name is Ben Brown. I work at Ohio State University in the Ag Econ department. And today I want to cover the market outlook as a result of what we saw come out in the world supply and demand estimates from Tuesday, May 12th. So these estimates are a couple days old at this point. The market has pretty much reacted to them. It was kind of, for as big as this report is, and it's one of my favorite reports of the entire year, is there wasn't a lot of shocks to the market, and we were seeing a lot of data. A lot of questions were going to come out as it related to ethanol exports. Keep in mind, this is USDA's first attempt at estimating new crop, so 2021, or the crop that'll go in the ground this summer, or is in the ground in parts of the country, I guess. And so there was a lot of data points coming out. Sometimes it has an impact to shock the market. We didn't see that. So if you didn't know the report was coming out, you probably didn't notice anything because the markets didn't really change, meaning that we pretty much had a pretty good idea of the direction the markets were going to go. There were a couple surprises, and we'll talk about them. But we're going to spend the next 18 months. What ultimately happens is we've got now 18 months to debate these numbers that USDA's put out. It's really their initial draw. And things are going to change as we work our way through the marketing year. Keep in mind that 2020-21 marketing year doesn't start till September 1st, and so for corn and soybeans. And so for a lot of these numbers, there's a lot of ways to go before we even start tracking those on a weekly basis. So we'll cover old crop and new crop, corn and soybeans during this webinar, and then I've got some comments about policies and risk management safety nets on the back end of this as well. So let's just dive in real quick. I want to start off talking first and foremost about old crop corn, and what I've got here is I have USDA's numbers in the first column all the way down the balance sheet. So these are old crop corn. In the second column, this is my estimates that I submitted prior to the report coming out. So these, like many Midwest extension economists, we have numbers that we submit in basically to kind of help give some market direction a little bit. It's unbiased. I mean, there's no bias into this as well, and the market really doesn't take into account our numbers. We just do it for our own interest and to kind of get on the same page across the corn belt. But these are the numbers I submitted. I haven't changed anything, but I will explain my color coding. So that first column for USDA, the red number is what they had, what they printed on Tuesday, May 12th. The number in the brackets is the change from the April report. So again, this is old crop, so we had those numbers listed in the April report. The second column, or my column, in terms of what I was estimating for old crop, the number that's there in the red was my estimate, my number that I submitted, and then I put in brackets my change from the previous estimate, or from that April number. So in both cases, both columns are showing what was actually printed or what I actually submitted, and then what's in the bracket is the change from the April baseline, to put that into perspective. So here's kind of a couple of things to point out and look at. First and foremost, on the supply side, keep in mind this is the 2019 crop. USDA ended up coming down a little bit from their 81.5. So they had 81.5 listed as for a harvested acres number in their April report. I submitted 81.3, but I didn't make any changes to yield. I still left it at 168 bushels to the acre. USDA came down in both harvested acres and yields, because keep in mind, we had significant amount of acres in the Northern Plains, Minnesota, North Dakota, South Dakota that was still unharvested at the time of the final, or what was supposed to be the final reporting date earlier this year. And so what they did is they made a commitment to go back and resurvey those producers in those regions. And then they said, we're going to print it in the May WASDE report. There is still significant amounts of corn standing from 2019 in North Dakota. And so USDA in this WASDE report also said, we're going to resurvey those producers again in May, and then we'll release that in the June progress report, or the crop report. So we still got a little bit of uncertainty, which is just crazy to think that there's still that much corn in North Dakota that we can't get an idea on yield and harvested acres, or we don't know if it's going to get harvested or not. So I came down 200,000 acres on harvested acres, but I left the yield alone. USDA kind of split the difference. They came down on harvested acres and brought their yield down 0.2 of a bushel per acre for a national yield. When you look at production, that equates to, I was 5 million bushels off, with yes, 5 million's a big number, but in the grand scheme of things, I was really close. Even though I didn't change my yield, I just lowered the acreage. I was really close in that. Beginning stocks left the same, imports left the same. Total supply, again, we see that 4 million bushel difference basically in total supply because there was a rounding error that I had. When we look at the demand side, so this was the big attention, is what was USDA going to do on the demand side, mostly in relation to increasing feed and decreasing ethanol. I had them increasing feed 75 million bushels, and I still think that USDA is going to come closer to me on that old crop feed and residual use number. Part of the reason why I believe in this is when we look at April, the big shock that was made in April to the demand side or the feed equation side was largely due to the stocks report number that came out in March. I still think they've got another estimate to be made on the feed and residual use. At this point, it'll probably come out in the June stocks report number. So that's when I think we'll see an increase to this feed residual use number. But right now, I'm 50 million bushels higher than USDA, and I'm still pretty confident in that number. Food, seed, and industry, that's made up of the corn we use for food, seed corn, but a chunk of that's ethanol. So we figure ethanol is a product, right, a subset of that food, seed, and industry number. So let's look at what ethanol does. USDA in their April report lowered ethanol in April 375 million bushels from their March report. So we'd already seen a 375 million bushel reduction in corn used for ethanol. I still think there's, I was expecting a 250 million bushel loss in this report. USDA did drop it 100 million bushels, but I would argue there's still about 125 million bushel drop to go. I've got it, if you do the math here, I'm still saying 150. I would put it at 125 right now, just kind of split the difference between 100 and 150. So I think there's still another revision that's going to come down on this corn used for ethanol number in old crop. Exports, they ended up increasing exports 50 million bushels. That tells me that they're expecting China to buy more corn later in this marketing year. So this summer to buy some corn. Right now, we're kind of on pace to meet that current estimate of 1.725. Given where we're at and what we see historically, I think they were pretty close with that 1.725. But nonetheless, they did increase that 50 million bushels. All in all, with the decrease in yield and then the changes in use, basically what ended up happening is we didn't really change our ending stocks that much at all. They ended up raising ending stocks 6 million bushels, which again, all these changes, and we didn't really do a whole lot to the balance sheet, if that makes sense. And so I was at a 16.3% stocks to use. That got me to 360. USDA printed a 360 price. So we're probably somewhere in between there, between 360 and 365 would be my guess for old crop ending marketing use. If we look now, this new chart here I'm showing you, again, same thing, only this is the new crop. So this is where a lot of the interest was. This third column right here in the middle, which let me circle it real quick. So if, this was what USDA printed in their first iteration of new crop corn. They pretty much left everything the same. And again, here's my estimate. So USDA in this first column, my estimates here, then the second column that I submitted. They pretty much stuck with script. You'll notice 97 million acres here. I had 97 million acres, 96.5 million acres. I was at 89.6 million acres. I was at 89. So I've got a little less harvested acreage number. Again, I'm pretty much counting some silage, some increase in silage for forage use, given where we see the alfalfa crop and how short it is and some of the straw market. I think we'll see a little bit increase in silage numbers this year. Yield was left at that 178.5, which would be a new record yield, national yield. So they're bumping that up. It's still possible we could see a 180 national yield, which I'll show you that here in my estimates. Beginning stocks, their beginning stocks number matches their ending stocks number. My beginning stocks number matches my ending stocks number that I submitted. I still think we'll come up roughly 2 million bushels or 200 million bushels in ending stocks from last year, which would be beginning stocks, and increase in beginning stocks this year. Production, again, really close to that 16 billion bushels of corn that was largely expected to be printed, and it did. But what USDA did was they got really creative on the demand side to help lower the blow here. So 16 billion bushel crop, which would be a new record by a long shot in terms of corn. They lowered imports. Again, we mostly import some of this specialty corn that we don't grow here in the United States, like some white corn that comes from Mexico to help with like flour tortillas, or not flour tortillas, corn tortillas, wrong crop, sorry, excuse me. But some of that white corn to help with that and chips. Total supply, we weren't that far off in total supply because, again, I've got that higher stocks to use number, even though they've got a little bit higher of a production value. When we look at the demand side, this is where they get creative. They have over 6 billion bushels of feed use in the 2020-2021 marketing year. That's really aggressive. That is a big number for feed and residual use. Keep in mind, that's 350 million bushels more than what they've got this year. That's including, the run up that we've already had. We've already increased this number 200 million bushels. Now they're 350 million bushels stronger than what we're currently projecting for the current marketing year. That's a really, really optimistic number, especially considering some of the challenges we've got on the livestock side and the contraction I think we're going to see in livestock over the next year in terms of cattle on feed and pork being fed out. I think we're going to see some contraction there, which is going to lower that incentive to feed. So a really aggressive feed residual use number. Now, some of this is residual, right? Just hanging around out there. And if, in fact, the demand is not there at the local level, we're going to see that start to show up in localized basis. We'll see that localized basis weaken basically as we start realizing that feed demand isn't as strong as what it is. So when I look at current marketing year for corn, and I see that in most places around the state, new crop corn basis is somewhere around 15 to 20 cents, negative 20 cents, negative 15 to negative 20. That's not a that's a pretty strong historical basis, and I think we'll probably stay there. I think we'll stay there in the short term, but as we get into the fall and the winter months, I look for that to widen some. Let's look at the ethanol side. This was also an area where USDA, is coming back on ethanol. Keep in mind, Iowa is also coming back on ethanol too to 5.4. That's a pretty much a complete return for ethanol, which they're at 90% return of the way back, which again makes me question this feed and residual number, because if we're producing this much ethanol, 5.4 billion bushels of corn, that is going to create some DDGs that is going to harm this feed number. So I think that feed number is really strong. Plus, both USDA and I are pretty optimistic that we're going to get ethanol production back to a pretty high rate, which we have, right? We've seen ethanol come back. My weekly outlook this week's going to be looking at ethanol, and we've kind of turned the corner on ethanol, and we're starting to return as some of these ethanol plants are starting to come back up online. If we look at the export number, pretty close. I was 50 million bushels higher than USDA on exports. Part of my reason there is I think we are going to see some opportunities to export some corn. There's places in southern hemisphere and then the Black Sea region of Ukraine, Russia, Western Russia, where it's dry right now, and the world is really tight on corn. If you take the United States and China out of the world picture for corn on hand, the rest of the world is the tightest they've been on corn stocks since 2001, 2002. So we're getting there's a lot of corn in the world, but it's largely held in the United States and China. So if you're China and you're looking to buy corn, which they say they're going to buy 20 million metric tons of corn, if you're looking to buy corn, you don't have a lot of options besides the United States. So the question becomes, do they follow through with that? I've been pleased with the new crop sales, export sales so far, and I think that'll continue. Long story short, USDA is at 3.318, which again, that's a huge ending stocks number to have 3.3 million or billion bushels of corn on hand. I was a little higher, a little above 3.5 billion bushels. Again, if we take 200 million bushels or even 250 million bushels out of this feed and residual use number, you're getting really close to where I was. And so I'm not sitting here saying that I'm right and USDA is wrong. All I'm saying is I feel more comfortable with my numbers now after seeing USDA print theirs. I feel good about my numbers. I think they're good. Again, it largely depends on this feed and residual use number there. USDA printed a 320 season average price for new crop corn. So this is the 2019-2020 cash price across the country. Keep in mind, basis across the country looks a little different. So this is all places around the country, but they're estimating a 320 season average for corn. I was at 290. If you take this stocks to use percentage, this 22.5% that USDA's got, it would imply that we're going to be below 320 corn. And so I think this is why the USDA kind of kept it at 320. The other thing that I think kind of plays in here a little bit is when you start taking into account marketing loans, PLC prices, which we'll talk about the PLC safety net and crop insurance, and you figure those all into the price. Once you get below about 310, you start adding cents back into your corn price due to your crop insurance coverage for most folks. And so there's kind of a floor, a natural floor between 310 and 315, to where even though cash price is lowering, crop insurance, marketing loans, PLC are kind of picking up that slack. And so it's just interesting to me to see that USDA basically printed a 320, which is really close to that floor. Do I think the cash price alone is going to go lower than that? Yes. But the realized price that farmers are probably going to receive when you take into account PLC payments, crop insurance payments, marketing loans is probably around 320. So if I'm doing a production budget using some of Barry Ward's production budgets, I'm probably putting in a 320 cash price or a 310 cash price, but not figuring in any crop insurance indemnities or PLC payments or anything, because that's going to be made up. If I'm making sense here, basically I'm just dividing that up per bushel and saying that, yeah, the cash price might be a lot lower than that, but there's pretty much a floor at 320. My bearish scenario, again, I'm throwing a bearish and a bullish scenario over here. Basically, my bearish scenario is that we stay at 97 million acres. We don't switch any corn acres out into corn. I'm putting a national yield at 180 bushels to the acre. I'm putting feed use at that really high, I would consider a bullish feed use number to be 5.6 billion bushels, a little over 5.6 billion bushels. Keep in mind, USDA is at 6 billion. So my bullish scenario is, my bearish scenario, this is my bearish scenario, is 5.625, which I think that's reasonable. I think this is a reasonable estimate for feed use. USDA is very bullish in that area. Ethanol returns back, somewhere in the neighborhood of 5.25. Exports lag, so China doesn't follow through on their commitments and exports lag, or if there's enough rainfall in South America that their crop turns out a little better than what we think it'll be. That gets us to a 29% stocks to use ratio, and we're looking at a 250 cash price. Now keep in mind, that's the cash price including basis around the country. That's pretty low, right? And I think people kind of squirm when they see that 250 cash price. My bullish scenario, we take about 2.5 million acres out of corn, put them into soybeans. We have a yield of 170 bushels. Keep in mind the trend yield is at 178.5. We did 176 2 years ago in 2018, and then this year we did 168 basically. So that 170 is not out of the realm of possibilities, but it'd take a year like last year to probably get to that 170 bushels to the acre. Feed use, I bumped it up to 5.675. Again, this is based on, I just want to reiterate that feed use number I've got is also figuring in increased DDGs from increased ethanol production. So it's just something to keep in mind and think about as we work our way through this year. Exports get really strong, and I'm basically figuring in a big export number to China, places like Mexico, India, and Japan, all coming through with strength. This number would likely have to be the result of a short crop in Brazil, their second crop being dry, and then dryness continuing in Ukraine, Russia, and Eastern Europe is basically to get to that number, that's what we would basically have to have. So at that point, you're looking at a 12% stocks to use ratio, and that gets us to a cash price of 410 if that relationship stays the same. So that's my bullish column. So you can see the difference. I basically laid out three cases, my average here in this column right here, my bearish and my bullish numbers as we work our way through. Now let's do the same thing on soybeans. Soybeans, not as much doubt in terms of the old crop harvested and yield numbers. Again, we pretty much had everything harvested. It was just the corn in those northern plain states that we were looking at. Nonetheless, they decreased production for 2019, 1 billion bushels. So not a lot in the grand scheme of this. When we produced 3.5 billion bushels, their decrease 1 million is not a lot. On the crushing side, they left that crushing number alone at 2.125 billion bushels. I had to increase 10 million bushels. When we look at the March NOPA report, or the National Oilseed Processors Association, they printed a number that they crushed 181.5 million bushels in March. If you do the adjustment for all the other plants, that's about 191 million bushels of soybeans crushed in the month of March. That was an all-time record, above and beyond what we saw. That came down in April to 171 million bushels for NOPA in April, which is still the strongest April month we've seen. 10 million less than the March report, but still the strongest April report we've seen. I'm a little surprised USDA didn't bump their crush numbers up 10%. I think they eventually will bump their numbers up 10%, but they're probably, I think this is a wait and see to see how the livestock sector responds to feeding some of these animals. And so I think they're kind of in a wait and see on this soybean crush. Then the big thing is exports. And this is where, I don't take comfort in this because I don't like the direction the numbers are going. But I want you to see what I printed. I printed, and I've been printing this for several months, 1.675. And I was in laughable territory. People laughed at me when and for months, I've been printing this 1.675. USDA is right at me right now. They dropped their export number 100 million bushels to that 1.675, to the point where I'm now thinking I might need to lower my number a little bit more too. But that is, we've taken about 400 million bushels out of the soybean export column in the last couple of months. USDA keeps coming to me on those export numbers, largely because we have not seen the soybean exports to China like a lot of people thought we would with that phase one trade deal that was signed in January. Keep in mind, it did not remove the tariffs. Now, the optimism that I'll show you in the new crop shows USDA's intention for soybean exports in the new crop. But nonetheless, I was at 570 million bushels of ending stocks. Again, I was in laughable territory. People were laughing at me for how high my ending stocks were. The trade was averaging 488. That was what the average trade guess was. USDA increased their ending stocks to 580. They increased them 100 million bushels. The difference being my 10 million bushels in soybean crush. So I was really, my soybean numbers look really good now. I think USDA is coming a lot closer in line to estimates, at least for me, compared to where they have been the last couple of months. And I've been arguing this. And as a result, we've seen some softness in the soybean market in the last couple of weeks. And I think we'll continue to see a little bit more softness as we move forward. That new crop basis for soybeans, to me, still looks relatively strong compared to where we're going to be on soybean production. So if you're looking at making some locking in some price potential, I would look at, those basis, because right now a negative 30-cent basis on new crop soybeans is pretty optimistic in my mind compared to, I'm expecting a negative 50, 55-cent basis for new crop. So now let's do the same thing we did on corn with soybeans. Again, this is USDA's numbers that they printed in the May WASDE for new crop. Again, their first iteration of that new crop. And then here's my estimates. Again, supply basically left the same. They ended up lowering. So all these supply numbers are pretty much the same. And the one difference would be their yield is lower than what their trend line yield was that they printed. So they're at 49.8. Their trend line would say 50.5. Again, they can do that based on what they think weather patterns and what planting conditions are. Long story short, that makes up the production difference between me and USDA. They've got crushing at 2.130. I've got it a little bit higher, 2.135. Again, I think we've just seen some strong crushing. I'm not expecting the year-over-year change next year like what we saw this year, because I'm not expecting the soybean crush margins to be as strong. And nor are we seeing them. If you look at a soybean crush futures ratio right now, it's just not as strong. But they're really optimistic on exports, 100 million bushels more than me on exports at the current time. And as a result, their ending stocks number is lower than mine by about 150 million bushels. So, it's one of those things that I hope USDA is right, and I hope we continue to see exports of soybeans. But that would be, all this hinges on soybeans and what we see from USDA or the US shipping soybeans to China. They've got an 820 cash price. I was higher at 850. That's just kind of, again, I liked my numbers. Not to say that 820 is wrong. I think we're a little bit higher than that in terms of new crop. Again, we've seen strength a strength of basis across the country higher than what we normally do. So when you take that into account and hope that producers take account for it, you do end up with that higher cash price, because again, it's a function of what the sales were across the country, even with a higher stocks to use percentage. My bearish column, again, I'm taking those 2 million acres out of corn and I'm putting them to soybeans. In this case, a higher yield, a national yield of 51 bushels the acre. Exports not coming through, and our export picture looking a little bit better next year than it does this year. Keep in mind, we export, right now we're just below 1.7 billion bushels for the year. So, I don't think this number is out of realm, right? I don't think it's going to take China buying soybeans and following through on those phase one commitments to get to a higher export number. And we just haven't seen that this year. Even in their new crop sales, they're nothing out of the ordinary. They're certainly not bearish signals, but they're not bullish either. And so 1.8 billion in a bearish scenario, that gets us to a 24% stocks to use ratio and a 785 cash price. My bullish scenario, we don't switch any acres out of corn into soybeans, which I don't think is unlikely. I think we will see, somewhere in the neighborhood of 1 million to 1.5 million acres switch out of corn into soybeans, especially here in the Eastern Corn Belt. A national yield of 50.5, which again, real reasonable. I think Keep in mind, this year we had an awful year on the soybean side in parts of the country, not necessarily Northwest Ohio, because the beans that did get planted yielded pretty good. But you know, that was the beans that were out west didn't fare as well, and so we see a decrease there. Exports come in at 2.1 billion bushels for next year. That'd be a bullish case. That's a 10.1% stocks to use ratio and a cash price of $9.05. So overall, you know, I guess what I'd have to say on the soybean side is I do expect some softening on soybeans. Whereas I think, you know, corn, if I'm looking at new crop sales, I'm probably waiting just a little bit longer. There's just nothing to get optimistic about on the corn side. It's not at profitable levels given the cost of production in Ohio. So whatever you're locking in is probably going to be locked in at a loss basis. I don't see a whole lot of room for improvement there on new crop basis. So at this point, you know, what we're looking for is any type of weather scare on corn, or if we start to see, you know, we get to June and we see that there was a lot amounts of acreage shifting out of soybeans into corn, which I think it's somewhere in the neighborhood 2.5 to 2 million acres out of corn nationally into soybeans or grain sorghum in the plain states or wheat in the northern plain states. But on the bean side, you know, I do think there are, you know, I think in the short term, we're looking bearish on beans to where that price is probably going to fall down a little bit more. We're probably going to see a little bit of weakening in basis. So if you want to take advantage of some of the strength in basis right now, I think that's a possibility. But beans is one of those I can make bullish easier than corn. There's just not a lot of bullish factors for soybeans right now, and so that's the challenge as we look ahead. Just a reminder that, you know, we're in a global market, and so one of the challenges on the corn side globally. Again, at the top here, these are old crop estimates. So USDA's May here in the first column, the average estimate going into the report, the high and the low estimate, and then the April report. Again, USDA was about 10 million bushels higher on corn than what the average trade guess was. Soybeans was pretty close. Wheat was a little bit higher too, but that's old crop. When we look at new crop, look at these new crop numbers. So almost 340 billion bushels of corn globally. The trade was closer to 320. Keep in mind, we were at 314 this year. So that's, you know, you're looking at 25 billion bushels of corn more, or excuse me, metric tons, 25 million metric tons more. Sorry, I switch balances. 25 million metric tons more next year than what we are this year. And that's just a lot of corn globally. Most of that, again, in China and the United States. That's a lot of corn, and that's going to continue to weigh on the corn balance sheet. So it's hard to get corn to be bullish. I mentioned I can make soybeans bullish quicker because look at these soybean numbers. You know, we were at 100 million metric tons this year. You know, that's dropping next year because we're seeing some places have expanded use, especially in the United States and South America, just more use of soybeans. Even though we're increasing supply, use is increasing faster than supply. I can't say that same thing on the corn side. There's just a lot of corn globally. And when we look at, you know, the potential to export, again, it's held in the United States and China, but we need places to increase corn use to be able to work down some of those ending stocks. So here's kind of my short recap and rundown. This is one of my favorite reports of the whole year. We get a lot of data. We get kind of the biasness, a peek at the biasness of USDA as we move forward. It contains several surprises, but it didn't change the market fundamentals. We still have a lot of corn and soybeans on the market and globally, and those are going to continue to weigh on soybean prices. I think it was more bearish for soybeans than it was corn. The market was expecting that 16 billion bushel supply of corn, and so that's why I think it was more bearish for soybeans than corn. Domestic corn production came close to that 16 billion bushels, but USDA got creative on the demand side. That feed and residual number that we talked about, I just think that's really, really optimistic for new crop, and I expect that to come down. Their export number was also a little bit, you know, I think higher than what some people would put it at, but nonetheless, those two being high created an illusion that the demand was going to be a lot higher, and therefore it softened the blow of the 16 billion bushels. For soybeans, USDA is very optimistic about Chinese global soybean demand. They have current soybean use in China 5% above their pre-African swine fever outbreak levels, which I think is really optimistic given that about half the Chinese hog herd the Chinese are about down half of what their hog herd was prior to ASF. So I think that's a really optimistic soybean use number. The focus now shifts to weather, especially in the upper plains and then eastern Ohio, about getting that crop in. How much prevent plant will we see? I would also add in Louisiana and Mississippi. There's not a lot of corn acres down there, but it's been real wet. I think we're going to see increased elevated levels of prevent plant in those areas too. Good crops are generally expected. When I talked to Aaron Wilson, the dryness that we're seeing in the western corn belt is continuing, even though there is some rains, at least in the near term forecast, to help that area. So, good crops are expected, but dryness is something that we're watching in parts of the corn belt. And then for any increase in price, we're going to have to expect China to be a player in the U.S. demand story. I think a positive is that we've seen them continue to buy, even though the U.S. and other countries around the globe are ramping up criticism of them for how they've handled COVID-19. The fear was that if we started slapping tariffs on them as punishment for how they handled COVID, that they would shut off ag exports or imports, and that hasn't happened. And I think part of that is the demand for corn by China is the demand for ag products by China is one of the few positive public relations cards they have to play right now to build some goodwill with the United States and globally. Large crops, both domestically and globally, are going to continue to weigh on the commodity markets. And I talked about this. There's just not many profitable moments at current futures prices. Corn, I think, has some recovery potential, especially in a weather market, but more from a reduction in acres. Not a lot, and when I talk about a recovery here, I'm thinking maybe 15, 20 cents over the next 3 weeks. If we don't see that in the next 3 weeks, I think it becomes very hard to see a corn price rally, but something in the neighborhood of 15, 20 cents in the next couple of weeks. Soybean harvest basis is still relatively strong. It's likely, I think if I go back and show you those ending stocks numbers for USDA, that 408 million bushels of ending stocks, that's the lowest I think we're going to see that number be all year. I look for that to increase on higher production and lower use, and that'll be a bearish factor for the soybean futures prices as we move forward. So maybe an opportunity if you got soybeans planted, I hate to say it, but it might be an opportunity to market, do forward contracts on soybeans, take advantage of that strong base, that relatively strong basis. But also these could be some of the best futures prices we see without a weather scare somewhere. Real quick on CFAP, this is the USDA portion of the CARES Act, or the direct assistance to farmers. There's $16 billion in direct support for farmers as a result of COVID-19. This is based on a loss the crop had to face, a 5% decline in COVID over a January to April time period. For Ohio, that's almost all of our crops except for wheat. Payment rates and details are still in the rulemaking process. However, I expect them to be released the week of May 18th, so sometime either Tuesday, Wednesday, or Thursday of this week. Or this coming week. National training is this week, or the Thursday and Friday of this week. So they're getting trained. So that's why I think we'll see something come out in the public news in the next couple of days. The program will be administered through the local FSA office. So they're the ones that you'll file the paperwork. Basically what we expect, and basically here's how you can prepare for the application, but I'm expecting this to be if you had crop sales or inventory. If you didn't have any crop on hand at the start of the year in January, I don't think this program's going to apply to you, and you're going to, your only hope is that they come through with another program later in the year that applies more to new crop sales. But I think for at least if you've got corn and soybeans on hand, or you've made sales between January and May, you're going to want to find those sales tickets. So I would encourage you to find any inventory records or start capturing your inventory that you have on hand, and then any sales tickets of items that you've sold, livestock, grains between January and April would be something to keep in mind. Again, for most of the farmers in the state, you're already going to have this information on record with the FSA office, your farm number, your adjusted gross income for eligibility. You're going to have that done. If you've never worked with FSA before, you can go ahead and get that done now if you want. It's something to keep in mind. As far as expected ARC and PLC program payments, again, I talked about, we're going to get some assistance, especially on the corn side at these lower rates. Basically, these are my estimates for 2019. So these are the program payments that are going to be made this coming October of 2020. So this is the old crop corn marketing year. Again, this is my estimates is kind of the end of April, just kind of as a date up here. That's kind of important. These haven't changed a whole lot, and nor will it between now and the end of the marketing year, because we sell most of our grain before now. And so, but if we look at the Ark County payment, some Ark County corn payments here, kind of in west central Ohio. These were areas that yield was down due to a little bit of drought that we saw. When we look at the PLC side, we're looking anywhere between 15 and 14 bucks an acre across the state for PLC corn payments for the old crop. So this is 2019 corn crop made this October. So that'll help with some cash flows as we go forward. And we look at that. If we look at the soybean side, again, soybean payments for old crop, a lot here in the western part of the Ohio. Again, a little challenges with yield, even though, again, we didn't have as many acres of soybeans planted in the Northwest, they yielded well. And this is a yield program. It's not a total production. It's a yield program. And so these lower yields here in the central west central part of the state, had low yields, and they triggered Ark County payments. When we look at the PLC program for soybeans for last year, it didn't trigger. We're not low enough on price yet to trigger PLC payments for old crop, nor do I think we'll get there for old crop. We could on the new crop side, but my guess is if we're triggering payments on PLC new crop, we're also triggering, I shouldn't even say it's a guess. My analysis tells me that if we're triggering PLC payments for new crop soybeans, we're also triggering payments for Ark County soybeans in the new crop as well. And then just finally wheat, again, Ark County payments for wheat here, but larger PLC payments for old crop wheat. Again, this will be made in October. So these are the 2019 wheat crop that'll be paid this October. So anywhere between 30 and 40 bucks of Ark County wheat, anywhere between 50 and or 40, upper 40s and lower 50s on PLC wheat. Again, those will all come in October, so should help us with some cash flow this fall as a result of lower cash prices. Keep in mind, the program payments, Ark County and PLC payments will be made this year for this crop, for the 2020 crop, won't be made until the fall of 2021. So that's why, even though we're struggling a little bit on the cash side for corn, the PLC payment that you get this October will be for last year's crop. Just to keep that in mind and be thinking about that. But nonetheless, cash flow is going to become important. And with that, I'll just remind everybody, we're going to do another farm office team. This is the farm office team of Barry Ward, Diane Shoemaker, Peggy Hall, myself, and David Marison. We've been doing these farm office lives just to kind of be available and ask questions, or for you to ask questions. We'll give updates on our different programs and kind of get as much information out to you as possible. Here's the link. You can go to this go.osu.edu/farmofficelive to get the webinar information. There's also a link on the farm office at go.osu.edu/farmoffice, and you can get the link that way too. So, but if you just go to this link right here, it'll get you in the right spot, and we'll send you a link after you sign up. So it's totally free. Again, we're going to be doing this Thursday, May 28th from 9 to 10:30. We look to have a lot of new information this time, as we'll have more on the CFAP funding, those USDA funds being distributed to farmers. And with that, I just want to thank you for your time. And if we can do anything for you at Ohio State, do not hesitate to reach out, and look forward to seeing you around the state of Ohio soon. Thanks.